Good evening to all the participants. On behalf of HWPL Peace International Organization, Hooghly, West Bengal, organized a webinar on financial literacy and wealth management in collaboration with Association of Mutual Funds in India. And I welcome to all the participants and especially Mr. Suryakant Sharma ji, Senior Consultant, Association of Mutual Funds in India, and ex-DGM of SEBI. Uh, because of heavy rainfalls in Hooghly, West Bengal, most of the participants are some issues are there, like internet issues. So I request Mr. Suryakant Sharma ji sir to start the session, and more and more participants will join within 5 to 6 minutes. So I request Mr. Suryakant Sharma sir, please start the session, sir. Please, sir. And one more announcement: uh, 417 registrations of today's webinar. Uh, I request, sir, please start the session, sir. Please, sir. Dear participants, please wait 1 minute. I am reading the profile of today's keynote speaker, Mr. Suryakant Sharma ji, sir. So I request all the participants, please wait 1 minute. Dear participants, please wait 5 seconds because some technical issues on my side. I'm not opening that file. Uh, Profile of Suryakant Sharma ji, sir. Suryakant Sharma is a postgraduate in commerce and law with specialization in corporate laws. He is also Chartered Associate of Indian Institute of Banking and Finance. Shri Sharma sir has over 35 years experience in banking and finance and securities market and had initially served in a leading financial institution. Thereafter in Department of Financial Services, Ministry of Finance, Government of India, and finally in SEBI. Shri Sharma sir joined Securities and Exchange Board of India in 2003 and served in SEBI for more than 16 years in different departments of SEBI. Lastly, in addition to other assignments in SEBI, he was in charge of Officer of Investor Awareness and Education in SEBI Northern Region for more than 5 years. And in this period, more than 15,000 financial literacy and investor awareness programs were conducted, and he himself had addressed it as a guest speaker in more than 600 IAPs. Shri Sharma sir was also a member of working group of NCERT for developing vocational courses on mutual fund for students of 11th and 12th class. Shri Sharma sir is also a recipient of Excellence Award from a leading trade body for promoting mutual funds in India. Shri Sharma sir is also a mentor of a few NGOs working for financial literacy and investor awareness in the country. After superannuation from SEBI in 2019, he has joined Association of Mutual Funds in India an apex body of mutual fund in India, as senior consultant for spreading financial literacy and investor awareness across country amongst citizens. Since May 2019, Shri Sharma sir has interacted with lakhs of investors and potential investors, students through more than 1,000 investor awareness online webinars and on-ground physical program across country in reputed government organizations, research institutions, leading in educational and professional institutions, corporate, startup, women-centric NGOs, and others. So I request, Sir, Mr. Suryakant Sharma, sir, sir, please start the session, sir. Please, sir.
Thank you very much and good afternoon to all of you. I am very happy that a renowned NGO of international repute has been our partner for this investor awareness webinar, and I hope that a good number of participants would join. But as I am told that owing to very heavy rains in the area, a good number of participants, though willing, are finding it difficult to participate. But I am told that they are joining gradually. So thank you very much for giving me opportunity to be with you today. But before I start my session, 2-3 things I wish to mention here. The first is this program is from Association of Mutual Funds in India, which is an apex body of mutual funds in India. But my dear participant, this is not a marketing event or a promotional event of mutual funds. This is purely a financial literacy and investor awareness program. And the purpose of this program is just to sensitize population or citizens about the importance of being an investor. And secondly, I will be more than happy if more and more questions come from the participants once my session is over. We will make the town hall open and they can just raise their hand. They can ask the question directly, or alternatively, they can put their questions in the chat box. The organizer will take those questions one by one, and I will try to give answer to the best of my ability and experience. One more thing I want to mention here, that I would wish to make this session as simple as I can, so that it can reach to the minds of all the participants. They might be students, they might be salary class people, they might be businessmen, they might be entrepreneurs, they might be professionals. So, because the participants are from different segments of the society, I will try to make it as simple and as common as I can, so that the purpose of the program is served. So, my dear friends, as you all aware, the first most important thing in life, which I feel personally, is health. It is greater or more important than your money. So I will request all of you, please give due importance to your health. Be healthy all the time throughout your life, and do whatever you can do, or rather more than that, to be healthy. Because if you are healthy, then you will be able to enjoy your money, which you will be having in your bank account, or in other form of investments you will be having with you. But of course, after health, the most important thing in our life is money. And money literally means personal money, personal finance, the money which I have, the money which I have in my bank account, the money I have in different form of investments, in different categories of assets. And that money will give us a comfort of leading a comfortable life. And for leading a comfortable life, for giving a comfortable life to your family, for taking care of the best education and professional education of your children, and for leading a comfortable retirement life, my dear friends, you will all need huge money in your life. That is why the importance of money in our lives. So the first question come in our mind when we think of money: from which source we get money and from where we get money? And the answer is very simple. Whatever we do in life, if you are in a job, you get salary. If you are in a business, you get profit out of business. If you are a profession, you get professional fees from your profession. So whatever we do, we get money from that. And plainly speaking, we do for money. Nothing wrong in it because we need the money. That is why whatever we do, the main intent of getting money is of getting money. So whatever money we get, what we do with the money which we get, there may be some students who may not be getting money or who may not be earning money today, but they will start earning money very soon. So there is a prime source of money for all of us. For whatever we do, we get money. And what we do with the money which we earn or which we get, a majority of our money goes into taking care of our monthly or regular expenses. A majority of them. And I'm talking about the middle class only. And I feel that majority of the participants are from middle class fraternity only. So majority of our money goes into taking care of our regular expenses. But my dear friends, one thing is very unique in our DNA or in our blood. And what is that? And when I say in our blood, I include all Indians. And what is that? Whatever money we earn, maybe earn 10,000 rupees or maybe earn 10 lakhs rupees. Every Indian, or for that matter, every Indian family try to spend not as much money as possible or try to take away as much money as possible out of their regular income. And the money which we don't spent out of regular income, my dear friends, it is called savings. And you should be proud of it that Indians are still one of the best savers in the world. And this practice is not on today. For centuries together, Indians have been best savers. And how our female members of the society save the money, it is not less than a miracle. You might have seen your mother, your grandmother, they would have saved 2 rupees, 5 rupees, 10 rupees, 50 rupees, and they would make it very big. So saving is in our blood. And we have been savers. But three things I wish to request, particularly young participants, with regard to savings. And these three mistakes I did in my life. I don't know about the other participants who are senior here, but I made these mistakes, and I will request to you not to make these mistakes with regard to savings. The first mistake I made is I didn't start my saving right from the month I started earning. I literally lost first 4 or 5 years in not saving anything. And what was in my mind at that time? Are Baba, there are plenty of years for me now. 30, 40 years are there. Let me enjoy the money I have started earning. I will start saving after after 4 or 5 years. That was a blunder on my part. For the first request, I want to make young participants, please do start saving right from the first month when you start earning. Don't miss a single month because it will cost you very dearly, and it costs it very dearly to me. So start saving right from the first month when you start earning. Second request about the saving is be religiously regular in saving. Again, I did blunders on that count as well. I was very casual in saving in the initial years. I started saving when some of the elders will tell me, but then again forget for the few months. Again, I got a review from senior. I will again start savings. So I was casual in the saving in the first 4, 5 or 10 years. That was again a second mistake I did with regard to saving. So I will request all of you, be religiously regular in saving. Every month you have to save. Of course, saving amount might kept varying from month to month because of change of circumstances. But what my request is, be religiously, every month you have to save as much as you can. And third and last thing about saving, I want to request all of you, please keep increasing your saving with the increase in your income. Again, I faltered on this. I was not so cautious about increasing my saving every year. Please keep increasing your saving with the increase in your income, and every year you will all know, if you are in a service you get increment, your salary get increase, or if even when you are in a business, your business gets settled and you start getting more income out of business, or even when you are in a profession, your profession gets settled and your income keep increasing every year. So with the increase in your income, you must increase your saving, and a thumb rule you must always keep in mind: try to increase your saving every year by 10%. Suppose in the first year you are saving 1000 rupees a year. In the second year, it should be 1100 rupees. And in the third year, you keep adding 10% of the incremental amount, not the flat amount, of the 10% of 1100 in the second year. So third year it will be 1210 rupees. So what I want to request all of you, keep increasing your saving with the increase in your income. These three things looks very normal and ordinary with regard to saving, but I can say with my experience, this will change your life forever as far as your money is concerned. So please do religiously follow these three things about the saving. Now, the second question arises, what we should do with the savings which we are making. Again, my generation faltered heavily on that too. We were savers. We saved the money, but we had a very bad habit, and particularly Indian female members of the society. They would save the money, but they will keep the saving at home. They will put their saving into kitchen boxes or hide in their boxes, and they will keep the money at home. And again, my dear friend, it was a great mistake on our part. And I term it as a crime. Keeping saved money at home is a crime. I term it like this only. And this crime you are committing against yourself, against your family, and against your country as a whole. So please do save. There is no other way out of for your prosperity of saving. But don't keep your saving at home. Then what to do? There is another option available to all of you all the time. Please keep deploying your saving into one or the other product. Please keep deploying your savings into one or other product, and the process of deploying your savings into one or other product is called investment. So the first step has to be saving, and second step has to be investment. So you should not only be a saver, but you should also necessarily to be an investor. And unfortunately, we Indians have been savers now, but now the time has come when young people should realize it, that they should also be investors. Now, this country has now to be a country of investors. We have been a country of savers, but then a time has come when this country has to be a country of investors, because only through investment your money will start earning money for you, and your investment will contribute to the economic growth of the country as well. So both are benefited, you individually and the country as a whole. So you have to be investor. And what the purpose of investment, my dear friends? The purpose of investment is very distinct and simple. The money which I have saved and invested in one or the other product should start earning money for me. That's the only purpose of investment. My money should start earning money for me. And if you save the money and don't invest, your money will get the value of the money will get diminished because of inflation. So mind it. You will be losing money by keeping your saving at home. But if you invest your money, if you invest your saving into one or other product, your money will start growing. So the purpose of investment is very simple. My money should start earning money for you. My dear friends, a day might come in your life. I am addressing it to young people. A day might come in your life, but it will not automatically come. You will have to work hard for that. But there is a possibility that a day might come in your life when your invested money will start earning more money than your regular income. There is a possibility of it. But it will happen not today, not tomorrow, not in 5 years. It will take minimum 15 to 20 years. So what I want to mention here is your investment can make huge money for you. Again, not automatically. You'll have to work hard and you have to follow a lot of other things which we will discuss today in our in my session. But your money can make huge money for you through investments. But in investment, three metrics you have to see all, you have to keep in mind all the time. Investment has got three metrics. Number one, the purpose of investment is to maximize a return. Everybody wants that I should earn maximum return on my investment. Everybody wish, and that is very natural that I should earn maximum return on my investment. So return is the first prime criteria of successful investment. Second, dynamics of investment is Second dynamics of investment is safety of investment, security of investment. Unfortunately, my generation was more focused on security of my investment. I was not bothered about the return on my investment. Of course, I wished it. But my main focus of my generation was, Baba, my money should be safe. Wherever I am investing, if my money is not safe, I will not invest. That was my simple funda. But I was wrong. Safety, of course, is a criteria. You have to look at the safety of the investment. But I personally feel for those who are young, or rather up to 40, 45, your focus should be on maximizing return on investment rather than on safety. Of course, safety should be a part of it, should be an aspect of it. And third dynamics of investment is that is third dynamics of investment is liquidity. Liquidity simply means I should invest my money in such a manner that when I would need the money in future, I should have money in my hands. That's the liquidity aspect of investment. Suppose you are investing, you're saving into one of the products which has got 15-year tenure, but you will need money after 5 years for some purpose in life. So that product of 15 years might be very good, but it may mismatch as far as liquidity is concerned, because after 5 years you may not have money in your hands, because you have invested your money for 15-year tenure investment product. That is why you should also look at the liquidity aspect of the investment. These three aspects you must always keep in mind while making your investment decisions. And one more thing I want to mention here. Return means real return. Normally, what is difference between notional return and real return? I just give an example. And I'm sorry if there is a banker, he might feel offended because I'm taking the example of bank FD only. And why I'm taking is because of a simple reason that everybody knows about the bank fixed deposit, bank FD. That is why I'm taking no other intention I have to discourage people to not to offer bank FD. The only purpose is it actually the simplest investment product for the middle class, salary class person. So suppose a person has 1 lakh rupees and he invests his 1 lakh rupees in a 1 year bank FD, and bank promises him to give 7% return, means 7% interest. After 1 year, when I meet him and just ask him, my dear friend, what happened to your bank FD? What his answer will be? I have earned 7,000 rupees, sir, and my 1 lakh rupees has been given back by the bank. I think that will be your answer. And you are very happy that you earned 7,000 rupees on your investments. But my dear friends, you are not right. Please understand what I want to wish to explain to all of you. You are absolutely right. You got credit of 7,000 rupees in your bank account. That's okay. But you literally didn't look at two very important aspects while analyzing return on your investment. and that is interest here in this case. The first and foremost aspect which you always look at while analyzing your return on investment is inflation. And what is inflation, friends? Inflation is nothing but increase in the prices of goods, item or services over a period of time. Inflation is nothing but increase in the prices of goods, item or services over a period of time. So suppose last year had you not gone for bank FD and had purchased some goods for some items or might have availed some services from that 1 lakh rupees, tell me very honestly, would you be able to get same items, same goods or same services after 1 year at 1 lakh rupees? Would it be possible for you? Everybody know it will not be possible. Because of inflation, prices of those items or services have increased. And suppose during this 1 year of bank FD, the inflation rate has been 5%. What does it mean? It simply means that whatever you could have got last year at 1 lakh rupees, after 1 year, you will have to pay not 1 lakh rupees, but 1,05,000 rupees for the same goods, same item, or same services. So now you see the proposition. You are very right when you say that you got 7,000 rupees. But in reality, my dear friends, out of 7,000, 5,000 has been eaten by the inflation. And you always please appreciate inflation is the giant killer of your return on investment. Measure a good percentage of your inflation is eaten by of return on your investment is eaten by the inflation. So out of 7,000, 5,000 had been eaten by the inflation, but you are still happy. Let it be, sir. I am satisfied. I still have got 2,000 rupees out of 7,000 rupees with me. No, my dear friend. There is another factor. Bearing a few governmental schemes, which I will mention if I get time, majority of the return on investment are taxable. Sometimes government takes income tax on your income or return on investment. Sometimes it is capital gain. So whatever it might be, most of the return on investment are taxable. But in the case of FD, I think you are aware, your FD income will be treated as your FD interest income will be treated as your income, and that will be added to your total income, and you will have to pay income tax as per your income tax slab. So suppose, conservatively speaking, you are in 20% bracket of income tax. Suppose. Then on 7,000, you will have to pay 20% income tax also, which comes to 1,400 rupees. Now you see the proposition. You are very happy when you thought that you got 7,000 rupees. But in reality, out of 7,000, 5,000 has been eaten by the inflation, and 1,400 you have to pay income tax to the government. And now because of technology, you can't avoid it now. Earlier, the rule was same. But we were assured, chodo na, who will come from income tax department and collect this money. So normally middle class people were avoiding mentioning such income in their income tax return. But because of technology, now you can't avoid it. So out of 7,000, minus 5,000, minus 1,400, you literally have 600 rupees only. That's your real return. 7,000 is not your return, my dear friend. Always mind it. Return simply means real return. 7,000 was only your notional return. So you should try to maximize real return. And whenever I will talk about return, when the session progresses, return simply means real return. Always keep this in mind. Real doesn't mean notional return which you got. Return simply means what is there available after inflation and tax liability. So now the question arises that bearing some investment products of the government saving schemes, majority of the investment products has got some risk. In some products, risk may be very low. In some products, risk may be reasonable. In some products, risk may be very high. Risk may be very high. So please understand, in investment, good number of investment products has got some risk. Now, when risk is there, my generation answer was no, Baba, we will not take. But now the Thinking should change and has been changing. Now youngsters feel that we can take risk. We should take risk because my intent is to get maximize real return on my investment in the first 20-25 years of my career. So in if you are intending to have maximum return on your investment, you should look at the products which have some risk factor. But you can manage your risk. You can manage your risk. I want to tell you that in a good number of investment products, risk is there, but you can manage your risk. How? Number one and foremost is while taking every investment decision, you should look at your risk appetite first. What is my risk taking capacity? What is my risk appetite? And my dear friends, every individual has got different risk appetite. Every individual for that matter. Because of age, because of income, because of family obligations and other factors. So while taking every investment decision, I have to look at my risk appetite, how much risk I can take, and my investment decision should be guided by my risk appetite. Side by side, you should also look at the risk in the product where you are investing. In the market, plenty of products are available which has got very high risk. In the market, there are products which had got reasonable risk. In the market, there are products which had got minimum risk. And in the market, there are products available where there is no risk at all, particularly government schemes. So I should broadly match my risk appetite with the risk in the product where I am intending to invest. Broadly match. Precisely, of course, it will not be possible. You please try to broadly match your risk appetite with that of the risk in the product. And if it matches, then you can consider investing your money into that product. So the first factor is look at your risk appetite. Second point of managing your risk is diversification. You have to diversify your investments. You should not put all your money into one investment product. Adage goes that you should not put your all eggs in one bag. You should try to diversify. Some of your money should be invested in the product which has got no risk. Some of the product which has should be invested in the money which has got lower risk. Some of the money should be invested in the product which has reasonably high risk, and some of the money should also go into the product which has got highest risk. Because high risk, high reward. That is the broad funda of investment. But mind it, there are people in the market who will promise you doubling your money in 4 years, giving you very high return. They are all frauds. What I am mentioning here is high risk is high reward simply means when you take high risk in your investment, there is a probability of getting higher return. Only probability, no guarantee at all. And if somebody gives you guarantee, be afraid of it. Be cautious about that because it may be a fraud, like Ponzi scheme, chit fund, and committees. They will assure you giving and doubling your money in 3 or 4 years. They will assure you giving 20-25% return every year. They can't. They are frauds. So at the same time, you should invest your money into high risk products which are regulated and regulated by the financial regulators. Broadly, it is RBI and SEBI. Of course, insurance products are not investment. That we will discuss separately. So you have to diversify your investment. And thirdly, be an informed investor. While making all your investment decisions, please take your time out to look at the product where you are investing. What is product? What is the risk inherent in that product? What is the horizon of that product? How will earn the return? What is the likely return you will get on that? So be an informed investor before taking every investment. Don't go by what others are doing. Normally in India, And typically in offices, what happens? People follow others. Mostly, people are following why? My brother is investing in their product, should I? My sister is investing, so should I. My friend is investing, so should I. My colleague is investing, so should I. No, that's a wrong thinking at all. I should not invest in any product only because my relations are investing or my friends or colleagues are investing. No, I will look at the product, look at my risk appetite, only then take my investment decision, not by looking at others, but on my at my own uh, investment profile and all these things. So you can manage your risk. I again tell you, risk management you can do, provided you follow these two, three things which we have just discussed. Now, the next question comes is, what for we save? What for we save? We save the money for tomorrow. Normal practice. What answer you will get if you ask somebody why you are saving? Because, sir, I will need money in the future. That is why I am saying today. So you are sacrificing today for tomorrow. And mind it, you will need huge money in your life if you wish to lead a comfortable life. If you wish to give a comfortable life to your family, if you wish to give a best professional and higher education to your children, and you wish to lead a comfortable retirement life, more so when you don't have any pension. So we will need huge money in our life. And how we can ensure that when I will need the money in future, I should have money in my hands. How you can try to ensure, not 100% it will be possible, but how you can try to ensure that whenever you will need money for your major milestone in your life, you will have money in your life. How you can ensure? That is through financial planning. That is through financial planning. You can make your financial plan. And I'm a student of finance only. I'm not an expert. I'm not an academician. And I can see with my experience that a normal educated person can make his or her financial plan. And I give emphasis here, every individual must have his or her financial plan, and for that matter, every family. How I can make our financial plan? Simply speaking, next Sunday, you sit with your family, take a white paper, make 3 columns on the paper. That is first column. In the first column, you jot down your milestones in your life. And what are the normal milestone in middle class life? Normal milestones. The first one is for which we will need money. The first one is marriage. For your marriage, you will need money, reasonable money, because normally in the Indian context, parents will take care of your marriage expenses, but still you will need some money in your pocket for going on honeymoon or for some extra expenses which you wish to do at the time of marriage. So marriage is the first milestone for which you will need money. Second one is purchase or construction or acquiring of house. Every family wish to have their own house. Wherever you are living, if you are in a rented property, you will definitely wish to have your own house over a period of time. So purchase or construction of the house for the accommodation for the family is the second and major milestone. Third is purchase of vehicle, four-wheeler. Very common, it's not big thing nowadays. But again, you will need money for purchase of a four-wheeler for your family. Then one more milestone has been added to the new generation, which were not so common in my generation, friends. That is going on vacation. Every family wish to go on vacation regularly, not once, but regularly, not only domestically, but international vacations. But for that, you will need money, rather good money every time you think of going on vacation. So vacation is also has become a major milestone in middle class life in today's context. After that, a very important and major milestone will come in your life. That is providing best higher education and professional education of children. And you will appreciate every parent for that matter. I don't know how many of you are parent. When you become parent, your thinking automatically changes. When I was unmarried, I had different thinking at all. But when I got married, when I got children, my thinking automatically changed. Then I thought that I should now live not for me, but for the family, and particularly for the kids, for giving the best comfortable life, for giving best higher education to my children. But for giving them best higher education of children, you will need huge money, friends. Particularly young ones who are around 20, 25, 30 today. Their children will go for higher education not today, but for after 20, 25 years. So for higher education of children, you will need money. Next milestone may be marriage of children. Again, in the Indian context, it is a liability of the parents to take care of the marriage of the children. And last but not the least, and rather very important thing, leading comfortable retirement life. Major milestone nowadays. More so in the context where majority of the people don't have pension now. In private sector, there was no pension earlier also, but in Indian government, the pension structure has totally changed now. So those who don't have pension will need huge money for leading a comfortable retirement life. So right from marriage to retirement life, you have got these milestones. Put it in the first column. And if I have left out something, you can add on. That leverage I can give you. You add on whatever milestones you have in your life, right from marriage to retirement life. In the second column, against each milestone, now you start putting the probable period when it will happen in your life. Again, estimate only. Precisely not possible, but just make a wild estimate. Suppose somebody says that I am not married, I am likely to be married after 2 years, put it 2 years against marriage. Then after 5 years, you will think of purchase house, and then vehicle 7 years, going on vacation 10 years, or start probable time horizon you put against each milestone, which you will be having against each milestone. So suppose you are married today and no children, then your children will go after 25 of your education, for higher education after 25 years, put it 25 seconds marriage. You will get retired after 30 years, put it 30 years. So again, I tell you, it is an estimate only. Put a wider estimate on against each milestone when they are likely to happen in your life. And third one, which is most important one. Now is third column is very important. Now start putting money against each milestone. An idea only, an estimate only. Suppose somebody says that I will need 5 lakhs for going on honeymoon because other expenses will be taken care of by parent. But honeymoon package I will need to purchase. So I will need minimum 5 lakhs for honeymoon package. So put it 5 lakhs against marriage. But my dear friends, it will not be 5 lakhs. Mind it. Today, if you are thinking that your honeymoon package will come after 2 years at 5 lakhs, you are wrong. After 5 years, honeymoon package might increase to 5.50 lakhs or so because of inflation. So please keep factoring in inflation in each your estimate of the money which you will need for each milestone. Two major things which I don't have time, so only two major milestones I will discuss in brief where you will need huge money. Suppose today a person is of 30 years and he has just got kids, or he has got no kids. Today, the regular MBA degree from a reputed institute in India normally will cost not less than 20 lakhs. A reputed government is. I'm MBA degree, just an example, any professional higher education. It will cost around 20 lakhs today per child. But my dear friends, those who are young, their children are not going for MBA degree or for that any professional degree today. Their children will be going for higher education after 25 years or so, 23, 25 years. And I think you have never thought of it. The MBA degree, which is costing around 20 lakhs today, will cost not less than 2 crore rupees after 25 years. Mind it. Always keep in mind, normally we are very casual. Let it be. God will take care of everything. Luck is there. Whoever is lucky will get all these things. These are wrong thinking at all. A MBA degree which is costing around 20 lakhs, my dear friends, will cost not less than 2 crore rupees after 25 years. And if you have perchance two children, around 4 crores only for the higher education of the children. And that too when you think of their domestic education. If you're thinking of them sending them to Harvard, or Oxford University or New York University or some international reputed institute, the cost might be even 2.5 crore to 3 crore per child. So literally not less than 5 crore only for the higher education of children. Now the last one, retirement life. And suppose you don't have any pension. Normally what happens when you retire, whatever you have accumulated over a period of time, and you get some superannuation benefit or are clubbed. Normally, I'm normal middle class. I'm talking about what normally people do at the time of retirement. They put all their saved money and superannuation benefit into some secured products, which will generate fixed income for you, on which you can enjoy your retirement life. Normally, it happens. But my dear friends, you will need huge retirement corpus. So I keep telling in my session, friends, be alert. When you start earning, please start developing a retirement corpus for you, because it huge requirement of retirement corpus is there. And I just give an example. Suppose a person of the age of 30, just talking of a normal middle class family, a person at the age of 30 says that he or she is managing their monthly expenses with 30,000 today. Today, they are somehow managing their monthly expenses at 30,000. After 30 years, my dear friends, when they get retired, the, the greatest disadvantage will be that they will not get credit of their monthly salary which they used to get when they were in service. But retirement or leading comfortable life, you will need money. So today, 30,000 you are managing your money. How much money you will need in the first month of retirement? Suppose after 60 you retire. In the first year of retirement, what you will need? A thumb rule is there, my dear friends. Please mind it. You are today you are managing your monthly expenses with 30,000. Now, after 30 years, for the same standard of living, no extravaganza, because of inflation, you will need not less than 2 lakh rupees per month in the first year of retirement, in the first month of retirement. So, in the first year of retirement, if you multiply it by 12, it becomes literally 24 to 25 lakhs per month, per year, sorry. And then a thumb rule is there. What should be your retirement corpus? Your retirement corpus should be not less than 20 times of your annual expenses in the first year of retirement. I again repeat, your retirement corpus should be not less than 20 times of your annual expenses in the first year of retirement. So 25 lakhs, we have just broadly calculated your first year monthly expenses, yearly expenses multiplied by 20. What it becomes, sir? 5 crore rupees. 5 crore rupees only for retirement life. Why I am emphasizing here is, you might be knowing it, at the time of independence, the average age of Indian was only 47 years. Which had now risen to 71 years. What? Because of better health condition and awareness. But what it simply means, normally people will be leading retirement life for 10, 15, 20, 25, even 30 years. So you will be living for 20 to 30 years after retirement. Normal thing I am talking about. In the first year of retirement, you will need 2 lakh rupees per month. At the age of 60, when you become 70, this 2 lakh rupees per month expenses will increase to 2.50 lakhs. When you touch 80, it will increase to 3 lakhs rupees per month. That is why huge retirement corpus is required, my dear friends. And a thumb rule is there that normally you will get 6% return on your investment of your retirement corpus. So suppose you have accumulated 5 crore rupees, putting your investment in some retirement corpus into some fixed income product at the 6% return. So 30 lakhs you will get every year in the beginning years only. So 25 lakhs we have just calculated, and 5 lakhs can be a cushion for any exigencies and medical expenses like that thing. So not less than 25 or 5 crore rupees for retirement corpus. Put it 5 crore against retirement corpus. Now calculate it, friends. You might get scary, and I want you to be scary. A normal middle class, salary class person, normal middle class person even, who is around 30 today, will need not less than 10 to 12 crore rupees for their milestones only. And friends, I have not included monthly regular expenses from 30 to 60. That I have not included. Only for milestone, you will need 10 to 12 crore rupees. From where you will get it? You might be lucky going to Amitabh Bachchan KBC show starting soon. You might win first prize of 10 crore this time. But then how many of us will go to KBC and will win first prize? Hardly one or two or five. What about the lakhs and crores of others? Everybody needs 10 to 12 crore rupees for comfortable life and for all the milestones. From where it will come? The only way out is start saving right from the day you start earning, and keep your saving invested into the best products available and diversified. That's the only way out of making, and then you can make 10 to 12 crore rupees. This I can assure you. And the chart which we have just prepared, first column, second column, and third column, it is called financial plan. And I feel personally, every Indian must have his or her financial plan as early as possible when they start earning. So those who are not earning today, and those who are earning and young, please do it on next Sunday. And those who are not yet start earning, when they start earning in the first 6 months itself, they should have their financial plan ready. And I keep telling in my session jokingly, frame your financial plan and put it in your drawing room. When you woke up in the morning every day, after going to the God, go to financial plan. Salute to financial plan as well. See what you are supposed to do, what you have done. Every 6 months, every year, you have to review your financial plan. How much you are required to save and invest, and how much you have done. If there is a deficit, keep increasing your saving and making it investable, and invest in the best available product. So financial plan will give you a psychological hammering. And that is very important. And simply making financial plan will not give you any result unless and until you execute that financial plan. Unless and you sincerely work on your financial plan as per your milestones. So please do prepare your financial plan and try to religiously execute those financial plan as per your broader pictures. Lastly, but not the least about investment is, and that is eighth wonder of the world, friends. It is called power of compounding. Power of compounding is eighth wonder of the world, my dear friends. And what is power of compounding in investment? Simply speaking, you have to make a promise with yourself, not with me, not with anybody else, but you will have to make a promise with yourself. And what is promise, friend? Promise is very simple but very tough. You will say, sir, on the one hand, you are saying very simple, on the other, you are saying very tough. Yes, both the things are correct. You will have to make a promise with yourself that whenever I get return on my investment, definitely when you will save and invest, you will start getting return on your investment. May not be today, may not be tomorrow, but down the line, after 1 to 3 years, you will start getting return on your investment. Whenever I get return on my investment, whatever the amount of return, that is insignificant. It might be 550 rupees, it might be 500 rupees, it might be 500 rupees, or even 5 lakhs or more. Whatever the amount of return, I will never use or consume that return. I will simply keep reinvesting that return with my other regular investments. I again repeat, I will not use or consume the return on my investment. I will religiously reinvest it every time when I get returned with my regular investment. And that I will do not today, not tomorrow, not for 1 year, for the next 15, 20 years. And if you do, or rather, there is no option of it. You have to do it, friends. If you do it, after 15, 20 years, you will have huge money in your hands. That is why the importance of power of compounding in investment success. And there is only way out, it's power of compounding if you want to make it big, as far as investment success is concerned. So please do religiously follow power of compounding in your investment philosophy, through which only you can have huge money in your hands. So these are the general metrics of saving and investment we have discussed. I just recapitulate for the sake of clarity for 1 minute. Savings are very important. 3 things you must remember about the saving. Then converting your saving into investment is more important and rather equally important than saving. Be an investor, invest your money. Then in investment, risk is there, but you can manage your risk by following 3, 4 factors which we have just discussed. So risk management is also very important in investment success. Then make your financial plan as early as you can, and it should be ready at least in the first 6 months when you start earning. And you should execute that financial plan. You should follow that financial plan. Then last one is power of compounding for huge success in investment. So if you do these basic things in investment, I can assure you, you will be successful investor and you will have good money in your hands whenever you will need the money for your milestones in your life, which we just discussed. Last segment, we will discuss for 10 to 15 minutes what are the products available in the market where we can invest. I will just try to put all the products before you. I will not promoting any product. I will not say this product is not good or this product is not very good. That is, you have to take a call on every product. My purpose is just to put broad investment products available for you. General for general middle class, early class person. I will not typically go into the high end products like rates, invits, those things. I will put it very simple for you. The first category of investment product available in the market is governmental small saving scheme. And the first scheme which I personally feel is reasonable is Public Provident Fund Account, PPF. It's a good scheme of the government of India, 15-year tenure scheme, and every year you have to deposit 1.50 lakhs in the PPF account. And ideally, if you can, you should do it in the before 5th of April of every financial year, because that will make a difference of thousands of rupees. Minimum amount you should deposit is 500 rupees, but it will make no benefit. If you are sincere to get good benefit of PPF account, you have to deposit 1.50 lakhs in the beginning of the financial year itself. 15-year tenure, you can open the account with any of the major banks and post offices, branches. Just give an example how it works. Suppose a person at the age of 30 started a PPF account and putting he or she is putting every year in the beginning of financial year 1.50 lakhs. For continuously he's putting every year 1.50 lakhs for next 15 years. When they attain the age of 45, because they started at 30, just for example's sake, at the age of 45, they will have a corpus of around 41 lakhs at the present rate of interest, which is around 7.10%. But there is a proviso in that scheme, and that you must take advantage of that provision, that you can extend the PPF account by for every 5 years tenure. Not less 5 years, not more than 5 years. So at the age of 45 years, suppose you extend the tenure of the PPF scheme again, depositing every year 1.50 lakhs. At the age of 50, again you extend it for 5 years, depositing 1.50 lakhs. At the age of 55, again you extend it for 5 years. So at the age of 60, 15 plus 3 extension, 15 plus 15, 30 years. In the first year, the corpus was around 40, 41 lakhs. In the last 15 years, at the age of 60, you will have a corpus of 1.65 crores around at the present level of interest. How it became from 42 lakhs to 1.65 crores? Power of compounding. Power of compounding is a magic, my dear friends. So PPF is a reasonably good account, a good scheme of the government of India. And the unique feature of PPF account is the interest earned is exempt of tax. That is one of the rare scheme of the government of India. One other scheme is there. I think broadly only two schemes are there where tax exemption is allowed. PPF is one of them. And I feel personally, middle class person, those who are earning reasonably money every month should have PPF account, not only of his or her name, but you can have option of opening a PPF account in your spouse name as even in your children's name if you have if you are comfortable putting money in that PPF account. So PPF account is a very good scheme for the government of India, which is tax exempt. Then second scheme is, I just put the name, mention the name because I don't have time. National Saving Certificate, NSC, where you can deposit your savings. Third one is Kisan Vikas Patra. Kisan Vikas Patra. Fourth one is RBI bonds. RBI also keep issuing taxable bond and tax-free bonds. There is no limit of investing in those schemes on those bonds. That is a continuing going on 5-year scheme. You can deposit the money, and the present rate of interest is around 8%, 7.8028%. It is floating nowadays, so it is around 8% today. Then government securities. You can also invest in government securities. Earlier, it was not so convenient for the middle class person to invest in government securities. But before 4 or 5 years, RBI had developed a website, RBI Retail Direct. I again mention the name. Please mention, Mr. Host, please mention the name of the scheme, RBI Retail Direct. And of late, RBI had developed a app also of RBI Retail Direct. You can download the app and you can start investing through app directly into the RBI Retail, into the government securities. Whenever you have some savings, you can keep investing it. And RBI bonds and government securities are relatively better schemes for your retirement corpus. So you can invest in government securities as well. Beyond that, big PSUs and other institutions like Nation Highway Authorities of India, Railways, they also keep issuing bonds and debentures to the public. You can also subscribe to those bonds and debentures. And they are giving a little bit higher return than of government securities. Then banks and post offices have got. Then banks and post offices have got very good saving schemes. You please visit the website of banks and post offices, and you can invest some of your money into banks and post office saving schemes. These are all under the umbrella of governmental schemes, broadly. There is one advantage and one disadvantage in government schemes. Advantage is they are absolutely secured, 100% secured. Whatever government promises you, when a scheme matures, whatever the maturity amount they will give you, including the return or interest you earn on it. And after deducting tax, it is tax if taxable, and tax-free, no deduction is there. So 100% security, no doubt about that. But then, what is the disadvantage? Real return is almost most reasonable. 1 or 2 or 3% max real return. Always look at the real return, I have told you in the beginning. So real return is almost 1 or 2% only. But as I mentioned in the earlier in my session, we should put some of our money in governmental scheme. Around 25 to 30%, I think, should go. And those who have crossed 40, 50 or 55, they should shift majority of their investment from other products to the governmental schemes, because after certain age, when you cross 50, 55, your focus should change from return to security. But when you are young, your focus, I feel personally, should be on maximizing return on your investment. But when you touch 50, 55, you should gradually start shifting your investment from risky products to the products like where it has got no risk or very least risk. Second category is real estate, where you can in. First category was governmental scheme. Second category is real estate and property, where you can invest. You are all aware about the real estate and property as an investment product. But as you all know, for real investment in real estate, you will need huge money to invest. Now the real estate prices have gone up like anything in most part of the country. So for investment in real estate, you will need huge money, and there is some risk involved. Market is up today, market might go down because of other factors. So some risk factor is there. Then maintenance cost and acquisition cost in real estate is also sometimes substantial. So I'm just putting before you real estate as an option. You take a call as per your wisdom and as per your risk taking capacity. Third category is gold, where you can invest. Historically, Indians have been investing in gold, and you might have seen in your family, Indian female members of the family are fascinated about the one thing only, that is gold. We should have as much gold as possible. And normally, female members will say, no discussions at all. Discussions have got no meaning. As far as gold is concerned, we should go and purchase as much gold jewelry as possible. Not today, but historically, it has been the case in India. For centuries together, gold investment was termed as a safety wall for the Indian families. So we have been purchasing and holding golds, particularly gold jewelry. But my dear friends, gold jewelry is a losing proposition. Please understand it. Because suppose today a person or a female member purchase 10 lakh gold jewelry today. She's very happy. After 10 years, she will definitely think of changing the design, new design has come, or the possibility of marriage of children or son or daughter. She will go to the jeweler from whom she has purchased. What jeweler will tell? Yes, ma'am, have a cup of tea. We will take it back. We will give you a new gold jewelry, but there will be cut of 30 to 40% on making charges. That we realize only when we go for exchange of the gold jewelry. So please mind it. Now the time has come, because earlier there was no option, but now the option is available. Time has come when you should go out of physical gold to the digital gold. That facility is available now. Government had started a very, very good, unique scheme, sovereign gold bond scheme. But government has stopped that scheme, closed that scheme. There has been no tranche of sovereign gold bond since June 2024, because the liability was going increasing like anything. So government stopped it. But still, digital gold facility is available through many of the institutions and banks. And mutual fund also has got a lot of digital gold, and silver and gold schemes are there. So you should go for the digital gold, because of course tax liability will be there. But suppose you today purchase a digital gold when the price is 10,000 per gram. After 10 years, suppose the price goes to 14,000 per gram. And my dear friends, you all know gold price is increasing like anything for last 30, 40 years. There may be temporary up and down, but for the long run, gold price is going like anything. So suppose after 10 year gold price goes to 14,010 gram, you will get 14,010 gram after deducting a minimum tax liability. And in digital gold, there is no problem of keeping the gold at home. Storage gold is a problem. You will not need locker for keeping your gold. So please think of considering digital gold, and I personally feel 5 to 10% of your investment should be in gold and silver. Now, lastly, security market, share bazaar where you can invest. Of late, you might have read in the newspapers, more than 5 crore Indians have started investing in security market. More than 5 crores, which was unthinkable before 5 or 10 years. A good number of people have started in security market. But I am very clear, as far as my opinion is concerned, we should not invest in security market directly unless until we have knowledge of the market. And unfortunately, my dear friends, still even today, 99% of the people who are investing in security market don't have any knowledge of the security market. Don't have knowledge, because it is a knowledge based market. It's a complicated investment product. It's not an easy product. But people have started investing in security market. Why? My brother got invested in it and got huge profit. My colleague had invested in security market directly, and he has got good profit. My friends and colleagues have got. People are investing only because their relations or friends or colleagues are investing. That's a wrong thinking at all. I had mentioned earlier also, your investment decision should solely be dependent on your risk appetite, not looking at others, and your time horizon of investment, of course. So direct investment in security might, I personally feel, is a risky proposition for the middle class, salary class person, unless and until you have knowledge of the market. And how you can directly invest in security market? Firstly, through subscribing to the new IPOs or FPOs, or purchasing share through exchanges. That mechanism we will discuss next time if you have got interest in it. So direct investment is a risky proposition for the middle class, salary class person, but there is an indirect way of investing, and that is called mutual fund. And of late, mutual fund has been a darling of crores of middle class persons. More than 5 crore in Indians have already started investing in mutual funds. And it is nothing nothing as far as India can. In Western countries or in USA, more than 70-80% middle class invest only through mutual funds in security market. But in India, things have started. Of course, very slowly. It has got momentum for the last 3, 4 years, 5 years. So, what is mutual fund? Now, everybody wants to know what is mutual fund. Mutual fund is nothing but an indirect way of investing. Firstly, you should understand. Mutual fund is nothing but indirect way of investing. You are not investing directly. You are giving your savings to some experts, which are called normally or technically fund managers or some asset management company. You are not directly investing. You are giving your money to fund managers. Naturally, one of the participants may ask me why I should give my money to them, why I should not invest it directly. Directly you can, but as I have just mentioned, if you don't have knowledge, you should not. Why I should invest through mutual fund? Three advantages there. Number one and foremost is I don't have knowledge of the market, but I am giving my money to the experts who will invest their my money with the help of their expertise and knowledge of the security market. So their investment decisions are likely to be relatively better than me, brighter possibility, because they are experts of the market, and additionally they are supported by a huge research team. Every mutual fund scheme has got huge research team. Before investing any penny in any of the script or any other investment product, they will go deeper into the different aspect of that product. And if they arrive at a conclusion that it is beneficial, only then they will recommend to the fund manager. Then fund manager will take a call. So the first point is, I don't have knowledge of the market, but people who are having knowledge of the market, I am giving my money to them for investment. Number two, I don't have time. My dear friends, investment is a very serious business. You are already doing a job, then you have family to look after. You don't have time. But investment requires your time, rather good time. So you that responsibility also you are giving to the fund manager, and he is 25, 24 over here for your investment to manage, because they will get some fee or commission out of that. Mind it, it is not a social service they will do. They will get some commission or some fee for managing your money, but that fee or the commission is strictly regulated by SEBI. And mind it, my friends, mutual fund is a regulated product. It is not Ponzi scheme. It is not cheat fund. It is not like committee. Mutual fund, every aspect of the mutual fund, every aspect of the mutual fund investment, every aspect of the investment decision, every aspect of the fee and profession, everything is strictly regulated by SEBI. So mind it, mutual funds are strictly regulated by SEBI. There may be a possibility that your investment may go down because of volatility in the market. But there are least, I'm using word least chances of any fraud in mutual funds. Just like Ponzi scheme and cheat fund committees, where people are duping crores of people every year. Some gullible investors put their money into some bogus scheme and they lose their money. But mutual fund is strictly regulated. So thirdly, you don't have any experience of investment, but they people have got good experience of 15, 20, 25 years of investment. That is why they are better placed to take good investment decision as compared to you. Because of three reasons, you may consider giving your money to the fund managers. But again, your intentions are very clear. I am giving my money to the fund manager, for that matter, investing in any mutual fund scheme with the sole intent and purpose of getting maximum return. My intentions are very clear. Put my money as per the contours of the scheme. Try to generate maximum return as much as you can. Return back, give me return after deducting your fees or charges as approved by SEBI. So mutual fund is a indirect product. Mutual fund is a indirect investment, and two distinct feature mutual fund has got. Number one, mutual fund schemes are available for all categories of investor as per their risk appetite. In mutual fund, friends, schemes are there where there are literally no risk, because your money will be invested into government or government sponsored schemes. In mutual fund, schemes are there where your money will be invested where which has got least risk. In mutual fund, schemes are there where your money will be invested into reasonably high risk products. And in mutual fund, schemes are available where your money will be invested into highest risky products. So as per your risk appetite, you can select the scheme and go for investment through mutual fund. Secondly, and equally important is, in mutual fund, schemes are available as per your time horizon of investment. You might not be knowing. In mutual fund, schemes are there where you can invest your money only for one night. Invest tonight and withdraw tomorrow morning. Hardly one night. That is called overnight funds. You can invest your money in mutual fund for 1 week, 1 month, or 3 months max. That is liquid fund. You can invest your money for a very short period. Arbitrage funds are there. Then you can invest your money in schemes which had got horizon of 6 months, 1 year, 5 year, 10 year, 50 years. So according to your risk appetite, according to your time horizon of investment, different mutual fund schemes are available. The only important thing is to select the right scheme. And that how you can do, I will just give a clue about that also as well. So mutual fund, you have got, you might not be knowing, in mutual fund, you can, through mutual fund, you can invest your money in international corporates. Sitting at your place, you can invest through international fund, you can invest in Google, Amazon, Facebook, big corporates, big exchanges across globe. International funds are there. So in mutual fund, different schemes are available as per your risk appetite and as per your time horizon of investment. Mutual fund is a very lengthy subject. I wouldn't be having time. So, as the next time when you will give me time, if you are interested, we will discuss mutual fund for minimum 2 hours. But to cut it short, the best way of investing in mutual fund for the middle class person is through SIP. And my dear friend, SIP is a magic. And SIP is nothing but just like a recurring account. You might have opened a recurring account in some bank or post office where what you do every month you are depositing some amount. After a certain period, your recurring RD is over, you get the amount including interest back. SIP just broadly like recurring account. You are investing some amount regularly into different schemes, and SIP is available in almost all scheme of the mutual funds. You can start investing very small amount. Longer the duration will be, higher will be the accumulation. SIP is the best way of investing for the middle class persons. And you might be aware, more than 26,000 crores of rupees are coming only through SIP in mutual funds every month. That is the awareness young people have got now. So if you have not started SIP, please think of it starting SIP seriously, but not because I am saying I don't have any interest. I will not get any commission. I will not get any fees, but I can say with confidence and with my experience, because in SEBI, officers are not allowed to invest in share market directly, but we were allowed to invest through mutual funds. And I have been investing in mutual funds for the last more than 20-25 years, and I am more than satisfied. That is why with conviction I can say that mutual fund is one of the best product for the middle class persons, particularly those who don't have knowledge of the market. So SIP is nothing but you are depositing every month and SIP can be even on daily basis. SIP can be on weekly basis. But since in India normally we get salary on monthly basis, so majority of SIPs are running on monthly basis. I will just give an example, then I am done as far as mutual funds are concerned. Of course, I can continue for mutual fund for next 2 hours, but I don't have time. Suppose a person at the age of 20 start an SIP of only 500 rupees with a good equity fund and continue with that SIP for 40 years together. I have intentionally taken longer period to make you understand the importance of long-term investment. 500 rupees SIP started at the age of 20 and he continued with the SIP for 40 years. And for starting SIP and for continuation SIP, you need not go to anywhere else. Everything is available online now. You can start SIP online itself, direct SIP, you can start. For 40 years, you continued with the SIP of 500 rupees only. You started at the age of 20. When you become 60, 40 years has elapsed. I am presuming a return of only 12%, whereas security market has given more than 15% return. But even to be conservative, only 12% I am taking. After 40 years, the corpus of 500 SIP will give you around 48 lakhs. Around 48 lakhs. But there is other way out which is more wiser and smarter. And I think you should use that option also. That is called top-up SIP or step-up SIP. Top-up SIP is nothing. You are increasing your SIP every year. With the increase in your income, you will definitely be comfortable in increasing your SIP amount. Suppose you started with SIP of 500 rupees. Next year, you increase it by 10%, made it 550. Third year, again 10% increase of 50. So every year, you are increasing 10% amount of SIP. In the flat SIP, you had got literally 48 lakhs. But in top-up SIP or step-up SIP, you will have a corpus of 1 crore 98 lakhs, literally 2 crore rupees. And it is not a magic, it is sheer mathematics. So what I want to tell you, SIP is a magic for middle class, salary class person. Early you start, continue for the longer period, higher and better will be the benefit of it. And I know a lot of my friends, young friends, who have started not one SIP, but 5, 6 SIPs are running consecutively. And as every SIP has got some goal, it is not casual approach. One SIP for marriage expenses, second SIP for purchase of house, contributing in the purchase of house, third SIP for purchase of vehicle, fourth SIP for going on vacations, fifth SIP for higher education of children, sixth SIP might be for marriage of children, and last SIP for your retirement life. So you can start SIP with a target in mind. And on majority of the website, SIP calculators are available. Suppose a person said that I will need 25 crore for my children's education after 25 years. The target is 5 crore, period is 25 years. You put in SIP calculator, in fraction of second, you will get how much SIP you should start now. And you should always go for the growth option, not for the direct growth option only, not for the dividend option. Dividend option simply means you are every year you are withdrawing the return. Growth option means you are literally reinvesting your return automatically. Every year you are not withdrawing anything. Growth option is the best options. How you can get the knowledge about the mutual fund? I am just sharing the name of the website. Please note it down. The name of the website is Mutual Fund Sahi Hai. Mutual Fund Sahi Hai is the website developed by AMFI. It is one of the best website for mutual fund. Purely authentic and sharing for information only. No marketing, no promotion. Every aspect of the mutual fund has been explained in this website in a most simple language. And information is available in majority of the languages: Hindi, English, Bangla, Telugu, Tamil, Udiya. A lot of major language that information is available. So please do visit Mutual Fund Sahi Hai website. Spend some time every day, half an hour or 30-40 minutes every day for next 1 or 2 months. By that time, after 1 or 2 months, you will have reasonable idea about the mutual fund, how it works, what is the mutual fund, how it works, what is SIP, what are the different scheme, what is the performance of mutual fund present scheme. Everything how you can invest, how you can withdraw the money, how you can get redemption, what is STP, what is SWP, every information is available. Please visit that website. I am here just to sensitize you about the importance of investment and investment in mutual fund. But you will have to work hard on it. You will have to spend time. You will have to work your energy. You will have to gain knowledge. That's why I'm telling you, mutual fund sahi hai. Please visit that website, and after that, if you are satisfied, then you can start investment in mutual fund, including starting SI. Lastly, 2-3 things I want to mention here. I had mentioned in the beginning also, again I am repeating with emphasis. Never invest your hard-earned money in Ponzi scheme, cheat and committee. Crores and crores of people have lost their money. I don't have time, otherwise I have given you hundreds of examples, because when I was in Sevi, I had dealt with those Ponzi scheme and fraud schemes, and we had filed a lot of cases in different high courts and Supreme Court. Since I was based in Delhi, I was a part of the team which had taken up these cases before the Supreme Court. Sahara, I can say a lot of things. PSEL, Sarda, a lot of things I can talk about, give you details, but next time. So never invest your hard-earned money in Ponzi scheme, chit fund and committees. They are all fraud. They will promise you doubling your money, but it will never happen. And it might happen in the initial stages, but they will ultimately vanish with your money. So please try to encourage people. Please try to encourage people. Please try to encourage people who is around you. Normally, who in make put their money in Ponzi scheme, chit fund and committees? Not educated persons. Majority of the person are like your peons, your rickshaw wala, your auto wala, your vegetable vendor. These people don't have any knowledge of the mud, but because of greed only, because they wish doubling their money in a very short period. They put their hard-earned money in Ponzi scheme, chit fund committee. So please try to convince them. Never, put your hard-earned money in Ponzi scheme, cheated fund and committee. If you don't have any knowledge, no problem. Put your money in banks and post offices. At least your money will be safe, or in mutual funds if somebody guides you properly. Last two sentences, my dear friends, I want to tell you. Prosperity is your right. Every individual has got right to be prosper, my dear friends. Every individual has got right to be prosper. And my definition prosperity is very simple. My definition of prosperity doesn't mean to be Mukesh Ambani or a big industrialist. My definition is very simple. I should have knowledge. I should have money for my needs. I should have money for giving a comfortable life to my family. I should have money for taking care of my family obligations. I should have money for giving best higher education to my children. I should have money for my retirement life. So that is my prosperity, and I have right to be prosper. But my dear friend, prosperity is not your luck. Unfortunately, we Indians believe on luck. Unfortunately. But luck is nothing in investment. I am very clear. It is your concerted efforts. It is your awareness. It is your alertness. It is your consistency. It is your regularity which will pay to be successful in investment. So don't depend at all on luck as far as investments are concerned. Make efforts. Save the money right from the day you start working. Invest your money in the best available product, getting maximum real return. Be a long-term investor. Don't be a punter. Don't be a trader in security market. Be a long-term investor. So prosperity is your right. It is not your luck. It is your effort only. And friends, those who are young, if they are not prosper after 25 years, only you will blame yourself, not others. Because you might have not saved the required money at the right from the beginning. You might have not invested your money in the best available products. You might have not been regular in or making yourself aware and informed more than the developments in investments. You will be responsible. But luckily, you have got time today. I don't have time. That luxury, I don't have friends. But those who are young, they they are very lucky that they are young today. And I personally feel next 25 years are going to be golden period of Indian economy, but that will be beneficial only for those who are investor right from day one, and they are long-term investor. Otherwise, you will simply clap that my economy has gone from this place to this place. My country has gone so much of economically growth, all these things. What ultimately I will get out of that economic growth will depend upon your investments. So be investor. And lastly, there may be one or two participant friends, maybe one or two, who might think wrongly, but they mistaken, but they think they develop some thinking in their mind. I am from a poor family. I was born in a poor family. My parents were poor. I want to tell all of you, my dear friends, please listen carefully, particularly those who have this wrong notion in their mind. Birth in a poor family is not a curse at all, friends. Birth in a poor family is not a curse at all, but living as poor and die as poor is a curse. And we can all avoid wherever we have born. Birth in a poor family is not a curse at all, but living poor and die as a poor is a curse. We all can avoid by managing our money right from the day we start earning. And I hope and I wish and I wish for you that you will be a good investor. You will be a successful investor by practicing the things which basic things which we have discussed today. And thank you very much. I am thankful to the organizers for giving me opportunity. Thank you very much, and God bless you all. Now, if you have got any questions, please come up with the questions. If you have got any question, just raise your hand. We will try to give answer to your questions. please come forward and ask the questions.
Sir, one question, sir, from participant, sir, NAV and SWP.
Actually, these are all technical things. NAV I could have explained, but I didn't want to make this session technical session. That's why I intentionally avoided all these things. But NAV simply means net average value of the investment at a particular time. SWP simply means systematic withdrawal plan. This is a term used in the mutual fund, where after a certain period, when you get retired and develop a huge corpus, you can withdraw some money regularly from your corpus for managing your retirement life. Yes. Any other question? Please come forward and ask the question. I will be more than happy to answer your to give answer to your questions.
Sir, one question from participant, SIP or PLI?
PLI is a totally different thing. PLI is a insurance scheme. And please, of course, I should have mentioned, I just forgot to mention, insurance and investment are both different things. Don't club it. You must have insurance, life insurance cover and health insurance cover. But then don't club with the insurance, with the investment. Unfortunately, in my times, the life insurance policies were also clubbed with the investments. We were told that you will get this much of money if you survive. But we realized after a long period that that was a wrong decision. Nowadays, I again repeat, every person must have two insurance, life insurance and health insurance. Both you should take even before your investment journey. You must first take life insurance cover and health insurance cover, and life insurance cover I personally feel through term insurance only. So please think of taking the insurance cover. After that, you should think of investing your money for your prosperity. So both are different things.
Sir,
PLI insurance scheme only.
PPF is also, sir, PPF, SIP or PPF?
PPF is a governmental scheme, SIP is a mutual fund scheme. Firstly, PPF has got guaranteed security, but in mutual fund there is no guarantee at all. Mind it. In PPF, you will get the return which government gives on as interest on periodically. Government now keep reviewing the interest rate also. But in mutual funds, return on your investment depend upon the performance of the scheme or a lot of other factors.
Sir, can physical gold to be converted to digital gold?
No, it can't be. It can't be.
Sir, one more question. New married, तो मुझे किस में पैसा लगाना चाहिए एज 26?
आपको अभी पहले तो अपना इंश्योरेंस लीजिए. First, you take life insurance cover of reasonable amount, adequate life insurance cover, and the thumb rule of insurance cover is your life insurance cover should be minimum 10 times of your annual income. Suppose your annual income is 20 lakhs, then ideally speaking, you should take minimum 2 crore life insurance cover. Then, after taking insurance, also take health insurance cover of under umbrella health insurance cover for the whole family. After that, you should start investing. You should open PPF account and 1 or 2 or SIPs as per your comfort.
Sir, best SIP or PPF or SWP? One more question, sir.
Everything is best. No investment product is good or bad. Every product is good. That is why it is in the market. Had people not have opted it would have gone. Investment products are available because some product might be good for me but may not be for you. So you have to judge the investment product from your risk appetite and your time horizon of investment. So I can't give you a general answer to this, that which product is good for you or bad for the product for you. It depends upon individuals, individual needs, individual horizon, individual needs, and your thinking as well.
So best investment for children below 20?
If below 20 means literally means then I suppose that you all already started investing, already started earning. Then you should start. You should first take 2 insurances, then start uh, SIPs in the mutual funds. Good good equity funds, in good equity fund to begin with, or index funds even.
So one more question. SBI Smart Child Investment.
SBI Small Child is a SBI mutual fund scheme which is basically focused for developing a huge corpus for the education of the children. It has got lock-in period of minimum 5 years, but you can extend it beyond 5 years also. It is basically meant for developing a retirement or developing a corpus for the higher education of the children.
Could you please guide us on what students like me should consider investing in?
My dear, you should start investing. You should start SIP out of your pocket money. For a good number of mutual fund schemes are available. A good number of AMCs have started a scheme for students with only 100 rupees SIP for students only. You should start SIP out of your pocket money.
So one more question. SWP is a systematic withdrawal plan.
And SWP, I had just explained. SWP nothing. One should develop a good retirement corpus, and you have retired. You need money every month. So out of your corpus, you can withdraw some amount regularly from your SIP, from your corpus. That is called systematic withdrawal plan. And in detail, I will explain next time, because it is tax efficient also, and a thumb rule is there that ideally you should withdraw not less than 3 to 4% of your retirement corpus annually. I think there are no questions. So should we close it now?
Yes, sir. Sir, message from organization side this time also, sir. Some sir, issues there. Heavy rainfall. So I thanks to sir
No issue.
for yes.
Yeah, actually, I was expecting, and normally in my session, more than 150, 200 people do join normally. But of course, these are special circumstances where, because of heavy rain, a lot of people might not have been able to join. But okay, no problem. Next time it do happen in life. Next time we will keep doing. Next time, if you are interested, I will request. I am requesting organizers. We will have a detailed session on mutual funds, wherein we will talk only about the mutual fund for minimum 2 hours.
So one or two questions, sir, more coming in chat box. Sir, one question: Canara Bank ka SIP is good.
No. I am not here to promote any particular AMC. That is your choice to go for any one or other AMC. I will not go. I will not give suggestion. This is good or this is bad. You can on your own decide. Last question only.
Sir,
Last.
Sir, where can physical gold be invested?
Physical gold, yes. People are still investing in physical gold. You might not be aware. 22% of a total total saving is still going into gold. 14% of the world, 40% of the gold available with the middle class is available only in India. Out of the total gold available among the middle class in the world, 14% are only with the middle class. So we middle class have been investing in gold. What my request nowadays, please think of investing in digital gold. Avoid investing in physical gold. So thank you very much for giving me opportunity. I am thankful to all the participants and organizers for giving me time. Thank you very much for giving me time, and wish you all the best. Be an investor. Be a successful investor, only through which you can lead a comfortable life, and you can take care of your family obligation in the best available manner. Thank you very much. God bless you all.
Thank you, sir. Thank you.